Hang Seng is the one which is leading the gains with 2% gains. That one is up 300 points.
That market move has ensured that the pound sterling, which the pound dollar mark, should I say, which has certainly gone to those lows, continues then to get some sort of strength.
The Reserve Bank is expected to raise interest rates for the fourth consecutive time, and there is a wide consensus that the hike could be around 50 basis points.
Normally, short-term fixes lead to short-term rallies.
The Tiago has been launched at an introductory price of just 8.5 lakh rupees for an EV.
Double upgraded Tata Chemicals to overweight from underweight, and they've sharply raised the target price to 13.19 now on Tata Chemicals.
First rates are in. The Nifty is opening above 17,000.
The extent of outperformance could narrow down. There is a massive global sandstorm blowing out.
We are struggling to find any margin of safety in the market.
It depreciated by about 10% in the last 1 year.
Yes.
It's crossed the psychological barrier of $82.
Tarapur facility has received a warning letter from the US drug regulator.
We had around $1.8 billion of overseas debt. We have brought that down to almost zero.
All women, whether married or unmarried, are entitled to safe and legal abortion till 24 weeks of pregnancy.
At the day's low, Nifty has seen cuts of 200 points from the highs.
Good afternoon and welcome to Closing Bell. I'm Anuj. With me is Prashant, and I tell you what, today if the markets followed pretty much a bit of a script, like we discussed in the morning as well, that there is going to be a gap up which could be vulnerable to be sold into. And in fact, today the market's texture has been still the rally, and in that sense the market gave you that gap up, and after that just one-way decline. Because this BOE move, like we discussed in the morning, should not be extrapolated to other central banks, should not be, meaning that the basic problems fixed. And that's what's reflected in the dollar index once again. It's inching up. After that overnight sharp decline, a more measured move will now come. And if you look at the US futures as well, there's a bit of a decline there. And once again, the Bank Nifty has led the intraday decline after starting firm. Expiry today, of course, so 16,800, I think, becomes the line in sand in terms of the highest open interest on the put side. Looks like that should be defended, but then, it's monthly expiry. You never know what last hour move could have, especially post 3 p.m. But Prashant, good afternoon.
It could have been a cracker of a session, Anuj, if, the global, what we saw yesterday evening translated to, something
if
big.
If we had traded yesterday evening.
If we had traded yesterday evening, it would have been, absolutely a cracker of a session. Instead of that, we have a 10, 12, 15-point change in the market right now. So it's nothing. 16,847 or so is where the index is at. But as you can see on your screen, it's almost a V-shaped lower bound market. From the starting point, it's consistently made lower highs, and it's kind of plateaued out over the last 15, 20 minutes or so. As we said, 60 minutes to go, and there is, of course, that's enough time for the market to do anything. We will keep, of course, a close eye on what happens. But quickly, before we go any further, how should you position yourself in the last hour of trade? Mitesh Thakkar is with us. With exactly that. Mitesh, good afternoon. Good to have you with us here. So it's flat so far. And you were earlier telling us that at about 16,800 or so, you would look for opportunities to buy, and about 17,100, 17,200 would be the area to sell. You're at the lower bound then, in that sense, closer to that. What would you do?
Yeah. So I think, I'm still betting on the fact that, Prashant, we will do a range between 16,750 to about 16,350. So around 16,800 is where I would want to explore some long positions. But on stock specific basis, we have been trading with more of short biases, but we have been trading long on pharma stocks. If you in fact notice the way Sun Pharma, DVs, Dr. Reddy's have done in the last few days, I think that's one sector which is showing strength. It was beaten down, it was underperforming, but clearly is now playing some kind of catch up on the relative strength, and that's working well. So I think on the index, yes, around 16,800, you can take a long with a 50-60 point kind of a stop. And two, I think, with stock specific biases, you can possibly be leaning on pharma side to take long positions while explore shorting in other areas. So I think that's the strategy which I would recommend. In fact, my trading call right now also has a buy on Cipla, which has just made a fresh high. That's a buy with a stop just below 1,100 for targets of 1,150, and a sell on Berger Paints, which I would recommend going short with a stop just above levels of 625, 626 actually, and a target of around 595 on the downside can be looked at.
Oh, absolutely. Cipla is the only index stock at a fresh lifetime high. What a month it's been. And like we're discussing with Nitya as well this morning, there's something which Cipla is doing right. in the entire pharma pack. The pharma pack itself hasn't had such a big rally, but Cipla really stands out. And the big breakout happened after last quarter's numbers. And since then, there's been no looking back. 1180 now on the stock, and big moves happening here. Devin Choksi is joining us from KR Choksi Securities. Devin, hi, good afternoon. In fact, I wanted to ask you about your view on Cipla. That's been the best sort of pharma stock for better part of last 1 year.
Yeah, Nosh, good afternoon. Well, I think more importantly, the companies which have basically moved from the pure generics to specialty generics, I think have had, I think, a good amount of time. And I think that is what is getting validated now. Both Sun Pharma as well as in Cipla's case, I think the products which they have registered into the Western markets, the specialty generics products, I think they are basically giving them a big amount of cushion against, I think, price erosion into the generic products, which otherwise, I think, affect the companies. And at the same time, I think they relatively higher amount of surety on, I think, the growth front because of, I think, the higher consumption of these innovative products. So from that perspective, I think likes of Cipla, likes of Sun Pharma, both these companies, I think, are remaining, I think, extremely strong position. Maybe the market has a reason also at this point of time to shift some part of the portfolio into, I think, the safer bets in pharma as well as in IT. And that's where I think probably are seeing more actions at this point of time in fund shifting into some of these stocks along with the fundamental reasons which I explained.
No, I got that. Just a quick word, if you will, Deven, on how would you look at something like a Z? There is a lot of chatter around it, but it's just all chatter. The Competition Commission sort of has to look at the merger proposal, has to take a call, and you know, some talk that it is imminent. I mean, a decision is imminent. Which way we don't know. The high was 400, nearly 400 at about 250 now. How would you look at this?
So, Prashant, good afternoon. Leave aside, I think, some of those near-term challenges on uncertainty side about, I think, the Competition Commission going through the proposed merger with Sony. More importantly, I think the way in which the company is positioning itself into the sports segment, I think, is possibly more inspiring. The sub-licensing rights that they have taken from Business Star for ICC tournament, I think is basically, I think, the first in the pack. I would like to believe that along with the Network 18 group, I think in Z's case too, I think the positioning is more towards the sports segment. And the sports segment is the one, I think, which generates higher amount of EBITDA, higher amount of profit for the companies. At the same time, I think the ad revenue and the subscription revenue remains, I think, relatively on the higher side. So given this kind of positioning that they have done with around 17-18% current revenue, I think possibly, I think if they shift, I think, this particular base to a higher level in the due course of time, in my viewpoint, I think the sports segment could possibly be, I think, a good cushion as far as, I think, the profit improvement is concerned. And that's where probably, I think, the stock remains relatively more attractive currently at this point of time.
Okay, by the way, just pull out the chart of Aarti Industries. That stock is down 6% right now. You know, Nimesh, of course, in the morning was mentioning in the standard brokerage report that Aarti is the one where there's been a double downgrade, and Tata Chemicals on the upside, 4% higher on that stock. That is where you have the double upgrade. So we'll just revisit that with Nimesh as well. But Devin, what's your view on some of these specialty chemical names? Say names like Aarti, Tata Chem, how would you approach them?
Yes, Anuj, I think the basic chemicals and the specialty chemicals, both these segments, I think I have assumed, I think, a significantly high amount of importance in the case of, I think, companies like even Tata Chemicals. Most importantly, the soda ash as a raw material, which is largely in demand and with the farmed up prices, more importantly because of, I think, the glass manufacturing requirement for the solar panel, I think, which is basically creating higher amount of demand for this particular basic raw material. I would think that, I think, the demand scenario likely to remain, I think, very strong. And companies like Tata Chemical, which is very, very strongly positioned as far as, I think, the production of the soda ash is concerned because of, I think, the shore-based activity that they have. My reading says that, I think, this particular segment is going to remain extremely profitable going forward. largely because of the demand scenario remaining strong and the cost of production, I think, remaining lower, likes of Tata Chemicals. And within the specialty chemicals too, I think the many companies probably have actually started moving very progressively. Even again, talking about Tata Chemicals, I think they have got the nutraceutical segment, I think, in which they have got higher amount of presence with both the nanotechnology as well as biotechnology, and along with Rallis India as their subsidiaries. So I would think that I think the specialty chemical companies, along with I think a strong presence like I think basic chemical in soda ash, company like Tata Chemical would be more fruitful to look at. The other commodity players in the basic chemicals probably may face the headwinds as far as I think the pricing pressure is concerned. And that could be one of the reasons for which I would think that many of the investors would probably exit them and would shift into the likes of SRF, likes of Tata Chemicals, as far as the portfolio is concerned.
Okay, in fact, let's revisit that entire topic. Nimesh earlier this morning alerted us about this Morgan Stanley note, and the two stocks that he highlighted in particular were Tata Chemicals and Aarti, and Tata Chemicals top F&O gainer, Aarti top F&O loser. Nimesh, let's revisit that.
Sure. So, as you rightly pointed out, both are seeing sharp reactions on the back of that Morgan Stanley note. Today morning, they put out a note on specialty chemicals, and in that, they've double upgraded Tata Chemicals to overweight from underweight, and they've sharply raised the target price there to 13.19 from their earlier target price of 8.50. That is on Tata Chemicals. On Aarti Industries, they've double downgraded to underweight now from overweight, and there they've got the target price sharply to 6.85. I'll come to individual reasons as well. They also mentioned about Deepak Fertilizer. They've marginally cut Deepak Fertilizer as well from equal weight to underweight, and there they've got the target price to 17.32. The top pick within the specialty chemical space is SRF. There they have an overweight stance, but they've sharply raised the target price on SRF as well to 35.71 now versus the earlier target price of 27.50 odd levels. Now coming to specific reasons on the downgrades and upgrades. First on Aarti Industries, the double downgrade is largely on back of reflecting material constraints and slower project ramp up. That's been the key reason for downgrading Aarti Industries. For Deepak Nitrate, the key reason is they're seeing limited visibility on phenol and demand risk in key segments for Deepak Nitrate, and hence a notch downgrade to underweight now. On Tata Chemical, the key reason for the big double upgrade to overweight is largely on back of sustained tightness in the soda ash market, as well as the fact that the company is doing better cost controls across the board. So the numbers are going to be quite strong for Tata Chemicals going forward, and hence a double upgrade on Tata Chemicals. Coming to the overall industry, Morgan Stanley is seeing a $25 billion opportunity till 2025 for the specialty chemical companies. One, they're going to benefit from the China factor, the shift from China, and two, the second leg of rally will come from upside will come from the Europe One strategy. So a lot of the European companies are going to face trouble, which means the production will shift to India, and that's where the big benefit will come for this Indian companies. So on back of that, between FY22 and FY25, Morgan Stanley is expecting a 22% profit CAGR for these companies, even though there's going to be some moderation in demand and there will be some product margin pressures as well. So two big calls from Morgan Stanley today: a double downgrade in Tata Chemical, and double upgrade on Tata Chemical, and a double downgrade on Aarti Industries.
Right. Nimesh, sorry, just one thing. Is a lot of the thesis for Tata Chemicals based on soda ash? Are they quantifying how much?
Well, that's exactly what the Morgan Stanley note says, that the key trigger for them is the tightness in the soda ash market, and that is something which even the management spoke about in the Motilal conference. I had highlighted that a couple of days back as well, that the management is quite confident that this is going to continue for the next couple of quarters, and hence the numbers are going to be quite strong, especially in the soda ash segment.
All right. The reason Nimesh, thanks very much. The other pure soda ash company, I mean, if the thesis is soda ash, is GHCL. Tata Chemicals, of course, is also soda ash, I mean, substantial, but GHCL is 100% soda ash. Any thoughts, Devin, on the other one, GHCL?
So, Prashant, I think when the firmness in the basic prices would happen, I think which has already happened, and it continues to remain so, I would think that the companies fairly would benefit would be Tata Chemical as well as GHCL, no doubt about it. However, I think going by the presence that the Tata Chemical has, probably I would give higher weightage to Tata Chemical, and that is where probably I think the reason for remaining a little bit more stronger on this particular company.
In fact, since we're talking about Aarti Industries, there's another reason for it to be under pressure. Of course, there's going to be the demerger, so shareholders will soon need to decide which one, do they want to be part of the pharma business or not. But anyway, let's hear out thoughts that we got from the management. Earlier, we spoke to the chairman of the company, vice chairman rather, and MD Rashesh Gogri. Let's hear out his thoughts.
The demerged entity will list, post filing with ROC within 60 days. So that is likely to happen around mid of October. So it will be mid of October plus 60 days. So it will list around mid of December. In pharma segment also, we are looking at 15 to 20% top line growth and also the bottom line growth. In combined, we had guided for last year we had guided for a 4,500 to 5,000 crore capex combined, out of which, chemical segment will be doing a large capex for 4,000 to 4,500 crore. And, the guidance, revenue guidance is, up for FY27 is 2.5 to 3x in terms of EBITDA. It is 3 to 4x, and profit after tax also 3 to 4x. So we are continuing our guidance for the chemical segment. In the nitric acid, we have a long-term contract, ongoing contract. So, it's a raw material link contract. So for us, it's basically the raw material fluctuation which gets affected, and raw material essentially is the ammonia, which is linked to natural gas. So we are not in a spot market where we buy. So we are insulated by the market movements.
Okay, by the way, just look at the market once again. There's been a bit of a pickup in the last few minutes. Just ahead of the expiry move, the bank Nifty has moved in the green, the Nifty has moved in the green, and a couple of stocks stand out. PVR is making a bit of a move, 5.5% higher on that one. Of course, this new movie release, whether that will continue the trend which started with Brahmastra, which is some kind of, at least recovery after a string of flops. So that's, I think, something which could be keeping the stock excited. And the other one is Abbott. Abbott has been making some good moves of late, 5% higher on that stock. So move to absolute high point of the day. Devan, any thoughts on PVR at current price?
Well, I think two important developments which I believe would be the trigger points going forward. One, of course, Inox merger, as and when I think gets implemented, would have the ability for the company to also command a little better pricing power. And the other aspect is that the expansion which is happening into the new screens with about expenditure of around 150 crores into 100 screens. So these two could be, I think, the triggers, for the next year. As of now, I think at this point of time, I would think that as the economy is now progressing well, people are spending money out, and as a result of which, I think the new and also I think the new movie releases, etc., which probably makes some of these companies, particularly PVR, more rewarding at this point of time. Not too sure about the valuations currently though on this, but I would like to believe that the occupancy in the theaters would increase, and that could possibly be the near-term trigger as well, as far as the company is concerned.
Okay, all right. Let's also focus on the NSE index changes which come into effect tomorrow. Adani Enterprises will be the second stock from the Adani Group to be included in the Nifty, while Shree Cements will exit the index. Vivek is here to tell us more and maybe tell us the flow impact as well. Vivek.
Well, that's right. So come tomorrow, a whole host of NSE indices will actually have a new look. None more important than, of course, the Nifty 50. So Adani Ent, like you mentioned, comes in at the expense of Shree Cement. On the back of this particular development, Adani Ent, analysts estimate, will see an inflow of $340 million. And this particular inflow is happening in the session today on the back of the fact that passive indices have to make the changes. Shree Cement, on the other hand, is seeing outflow of close to $100 million. Now, some of the other indices that we are tracking, remember, there are changes that have been announced earlier across most of the major indices like the Nifty Next 50, the Mid Cap 100, the Small Cap 100, but some of the top stocks and indices that we have highlighted. So within the Nifty Next 50, have a look at some of these inclusions. Adani Total Gas, a little over $60 million worth of inflow expected. Bharat Electronics, Hindustan Aeronauticals, Bharat Electronics over 60 million, Hindustan Aeronauticals over 30 million. Now, in the range of 25 to 30 million, you also have names like Emphasis and Samvardhana Motherson International. These two are making their inclusion into the Nifty Next 50. On the other hand, some of the exclusions are Jubilant Foodworks, Lupin, Mindtree, Punjab National Bank. all seeing outflows in the range of $15 to $40 million. One key change that is happening in the session today, the CPSE index, while there are no inclusions or exclusions, there's a significant weight change. So Power Grid actually has seen a weight change, and analysts estimate an impact flow of close to $30 million, while Coal India sees a weight reduction. Analysts estimate a $12 to $14 million outflow in the session today.
Okay, Vivek, thanks a lot for that update. Let's do one thing. We'll take a break. The market is still trying to find its feet, trying to find its equilibrium. Once we come back, we'll have a couple of more questions for Devin, and Rajesh Kothari will be joining us, Managing Director at Alpha Credit Advisors, to discuss his portfolio strategy.
Down 10 points, 16,846 is where we are at. So I mean, that 20-25 odd point flurry that we saw on the upside, that is all but gone. You know, the other one which was doing well for the bulk of this week, not bulk of this week, last 2 days specifically, was Muthoot Finance. From a low of 950 yesterday, it went to a high of 1,054, but today it's down again about 2% or so. I think Manappuram also had a decent kind of run. But I mean, from the lows it came up a little bit, 5-6%, and today it's flattish. Devin, any thoughts on these gold financiers?
I think currently the situation, Prashant, is more also because of the festive season. This time around, I think the festive season is more important because after 2 years of gap, I think the Diwali is happening as far as I think the celebration is concerned, and also the fact that I think the marriage season is coming up next. So all this put together, I think, is resulting into higher demand for gold. Having said that, I think the global turmoil also is the factor which one should be asking for, because the gold prices have started firming up largely because the money has started shifting partly into the gold as well. So all in all put together, I think this could be possibly one of the reasons for which I think there's some amount of shift has taken place into these companies, particularly the jewelry companies, where investors have started putting money. I'm not too sure how much attribute you can give it to this kind of behavior, but I would definitely like to believe that I think the amount of the business demand which they are generating, including companies like Titan, they would have relatively better time in this festive season, particularly in the October-December quarter. Numbers should be reasonably good, or maybe I think significantly good in some cases.
Okay, by the way, just pull out the intraday chart of Asian Paints. I mean, that's been the only stock which has been weak. And today, of course, in the morning itself, it looked like that with the way crude prices had gone up. But this is very interesting. I mean, normally Asian Paints does not fall like this. I mean, 5%. And what it's done is, when we started trade, it was practically at all-time high. So it's just seen that correction. Devin, any view on Asian Paints, whether this fall is giving a buying opportunity, or do you think it needs to fall a lot more before it becomes sort of good risk reward or good sort of value investment?
Well, I think that would be always a wish from long-term investors, that if the stock price falls, I think one should be buying into this particular company. However, having said that, I think they have reasonably good amount of abilities to meet the cost pressures. I think they have got a big scale, I think, in which they are operating. The backward integration, I think, is extremely powerful. Supply chain, I think, possibly helping them in I think, keeping the cost under control. And more importantly, the opportunity which is now there, which I talked about for other sectors, I think is there for paint as well. Like, I think you are having the better sales in housing sector, which is also resulting into, I think, better offtake for paint. And at the same time, I think the home decor segment in which the company has moved into is systematically making more progress in variety of verticals in which they are, including lighting, including the sanitary wares and others, among others. So from a perspective of looking at, I think, this particular company, yes, I think expressively traded. If it comes down, nothing like it. But at the same time, I think has much better ability to possibly, I think, meet the cost pressure and also pass it on to the consumer, given the strength of the market and the demand that they are having at this point of time.
All right, Devin, got that. Thank you very much for your time. Good speaking with you. Appreciate you joining in today on the show. Well, absolutely flat market, 16,856 on the index right now. Chemcon Specialty is buzzing in trade. It's up some 8%. Sonal is here to tell us why. Sonal.
Well, Chemcon Specialty, that is in focus because they have launched and commercialized a product. They say that commercial production of P9 unit at Gujarat has started, where they will be launching bromobenzene with a capacity addition of 2,400 metric tons per annum at this new unit that has been commercialized. The company says expansion of this new product will let them foray into a new product portfolio altogether and will also help cater to the demand that the existing customers were talking about for bromobenzene. Now, this is a new product addition for the company. We need to know the margins. However, just to give you a brief about the company as well, it is engaged in manufacturing and sale of pharmaceutical chemicals and oil well completion chemicals, and company is the only producer of HMDS in India, which is used in pharma chemicals as well, and third producer in the world and largest manufacturer of CMIC in India and second in the world. So it does have some niche product in its portfolio, and it is adding more onto that one, and that's why the excitement in the stock today.
Okay, all right. Thank you very much for that. Sonal, that's the stock which is making all the moves today. It's a small name, but big moves on that one. Rajesh Kothari is now joining us, Managing Director at Alpha Accurate Advisors. Rajesh, good to have you here as always. Thanks very much. You know, there was this, Nimesh earlier was highlighting this call from Morgan on names like Tata Chemicals. Actually, on Tata Chemicals, there was a big upgrade there. Stock's doing fairly okay today. The thesis is, the relocation of chemical manufacturing from China to India. Soda ash, which is a large chunk of the business, is doing very well. Tightness remains. Any thoughts on that one or a 100% soda ash player like GHCL?
While, generally we do not invest in, commodity stocks, the businesses who have a direct exposure to commodities, we avoid such companies in our portfolio. But having said that, I think one theme which is clearly emerging, and we are doing further research on that theme, is Europe plus one. So China plus one is a well-known story. I think a lot of theses have been already written on it. But Europe plus one is increasingly becoming the new opportunity. It is an advantage India clearly in such a scenario. And with the spiraling energy cost in Europe, a lot of production capacities are probably going to become unviable, at least in the short term, if not in the medium term. And that will force European companies to look at countries like India, because China is already having its own problems. So there are not many countries which can probably has a what I would say this kind of an opportunity to capitalize. So India clearly fits that bill. And there are many companies and many sectors which will get additional boost out of this European crisis.
Okay, fair enough. Rajesh, good afternoon. So any new stocks that you have added to your portfolio, which you may be at liberty to discuss? Any new themes?
Hi, good afternoon, Anuj. Nothing new theme perspective. As I'm saying, the one theme which is emerging, which I just discussed right now, is the Europe plus one theme. And I was just looking at last week entirely, many of our portfolio companies, how they are positioned to get benefit out of this. And surprisingly, in last particularly 10 days or so, there are good announcements by companies. Just to give one example, we are holding one company, Schneider Electric, in our AAA emerging giants. Please put a disclaimer. And this company has announced the capital expenditure of 130 crores. Primarily, I think it is for exports. And they are going to expand the capacity almost 2.5 times over next 4 or 5 years. So I think this is just the beginning. If you ask me, there are a number of companies which are looking at making India as a, what I would say, reliable source for manufacturing. China was basically just outsourcing, whereas this is captive manufacturing done by Europe in their own plants, correct? Which they now plan to shift maybe X percentage, maybe 5, maybe 10, maybe 15. It varies from company to company. And particularly, it will benefit the companies which already have a base in India. So multinationals having subsidiaries in India will be the first choice. It is a very obvious thing because they already have the ready infrastructure. Land is already there. Probably you just need to do greenfield in terms of either more brownfield, less greenfield. So from that perspective, you are not going to take 36 months to put up a new capacity. So I think it is an obvious choice. India is an obvious advantage, and there are many companies, particularly in capital goods, which are probably going to get benefit out of this. And likewise, there is also a bucket of companies which are already having a European customers. So customers' approvals are already in place. And those companies will also get very big benefit, and particularly that is in specialty chemical. So these two sectors are, I think they are clearly beneficiary of this Europe plus one theme.
Although, Rajesh, there's a problem with high energy costs in Europe, etc. But, these things usually get solved, right? One way or the other. I mean, so for example, there are gas issues. They will import more and more LNG, regasify. It's highly unlikely that things will they'll hurt for a while and then come back. So can one base a theme on that? Isn't this kind of transient?
I think it's a very interesting question what you ask. I think very important from any global company is a BCP plan, the business contingency plan. And I'm not saying they are going to do 100% from India. Definitely not. I'm also not saying that their plants will close down permanently. Again, definitely not. But can they do additional 5, 10%, 15%, depending upon each company? Can they do it from India? And that looks, what I would say, that's a possibility. As I'm saying, one of the company has already announced the capital expenditure program, already announced on the exchange. There is one more company, which is again part of our triple emerging giant, Schaeffler India. This is one of the top 3 bearing company in the world. They have actually announced this 1,000 crore capex much before this European energy crisis. But if you refer to the recent conference call transcript, the MD was very candid and he said that there is an increasing possibility of higher exports from India to cater to the European requirements. So there is no one fit kind of an answer. It varies from company to company. And we are doing further studies, very detailed study on it. And maybe give me probably another 1 week or so. We may come out with more details on this. And probably then I can share more about those companies and the sectors which can directly benefit out of this.
Anuj, have you wondered if it is China plus 1, it should be Europe plus 2, right?
I think
on a lighter note. Sorry, go on.
Yes. Yeah, I think the very good thing what you are saying is the important sign is plus. When the entire world is going through minus, India is actually seeing the plus sign. And I think that's happy news for all investors.
No, absolutely. And I would love to get your, as you said, you're still working on the theme. So maybe a week, 2 weeks later, we can have you back on with maybe slightly a deeper dive. Go on, Anuj.
Just by the way, just look at some of the 3 p.m. moves. Pull out Adani Enterprises intraday chart. You're seeing a bit of a sharp knife, sort of knocked down there. And on the upside, you have IRCTC. Just pull out that intraday chart on that stock. This is, of course, the 3 p.m. move playing out in some of the names. IRCTC is on the upside. Aurobindo Pharma is the other one on the upside. Hdfc Life is another one. What else? You have Crompton, which is moving higher. So these are few names that stand out on the upside. And on the downside, as I said, Adani Enterprises stands out. Look at Vodafone Idea. Vodafone Idea's intraday chart. Bajaj Finance is the other one where you're seeing decline. Rajesh, do you have investments in Bajaj Finance? That stock has, and before this fall, was one of the best outperformers.
Yeah, I think, yes, first of all, definitely we do have Bajaj Finance in our portfolios. And I think, right now, the kind of negatives what we are people are looking from the banking perspective. For example, the negative surplus. For example, likely pressure on net interest margin for the sector in general, and NBFC in particular. I think companies like Bajaj Finance and similar companies, be it a leader in vehicle finance or be it a leader in gold finance, I think they are a natural beneficiary of such trends. So we remain absolutely very bullish on Bajaj Finance as a name, and I think this kind of a company will continue to grow at 25% plus at least for next 3-4 years. So, the short-term correction notwithstanding, I think is also a stock which bounces fast. Probably one of the fastest and sharpest bounce we have seen historically is in Bajaj Finance. So I'm not worried, beyond a point because of the short-term natures.
Okay, all right, Rajesh. Thank you very much for coming on. Great speaking with you. And as I said, we'll have you back soon on the theme that you explained. And we'd like to hear more on that from you. The market, by the way, has taken a dive, right? I mean, 50 points, as Anuj was also pointing out. We're at 16,810. So, I mean, volatility is back, and it's all happening as this is with 25 minutes to go for close. The high was at 245. The high in the latest move, which was about 16,881, and we've given up about 75 points since then in the last 20 minutes or so of trade. We'll take a quick break here. We'll come back, and as always, we'll get a quick check going on what's happening in dealing rooms, what's Nimesh picking up there on D Street Chatter, ideas as well with Mitish, just in a bit.
Well, the market's been doing quite okay. It's just that in the last few minutes, the Nifty has seen a bit of a nosedive. The broader market's been doing okay. Some other names moving to the low point. HDFC. Excuse me. It happens with HDFC, of course, on expiry day. These 3 p.m. moves get more pronounced on both HDFC and HDFC Bank. Adani Group stocks, by the way, Adani Enterprises is really taking a bit of a pounding here. That one's moving lower. So these are few names which stand out in the 3 p.m. move. Let's go back to Nimesh then, this time, of course, for D Street Chatter. Nimesh, tell us, what have you picked up?
Hi, as expected, the volatility is on the higher side because of the expiry, so that's clearly playing out. But the overall feedback is maybe global markets as well as Indian markets are poised for a bit of a pullback rally, at least in the first half of the new series. That's the overall feedback. And one of the reasons could be the fact that, if you look at for the last couple of days, while in the index level there is a lot of pain, there is a bit of outperformance in the mid-cap and small-cap. And that's the space where I believe some bit of domestic money is chasing now the mid-cap stocks, the high-quality mid-cap stocks, so to speak. So that's where the bit of comfort is, that maybe there will be a bit of a bounce-back rally from the key support levels on Nifty and on Bank Nifty, at least in the first half. In terms of flows, it's going to be mixed and all over the place because of the expiry. Also the fact that there is a rebalancing flows as well in CPSA as well as Nifty and other stocks. So that's going to have a huge impact on the flows for today's trade, so not much to count into. From a technical point of view, I guess the range seems to be between 16,700 on the downside. That's where the big key support for the Nifty is. And maybe in the first half of the new series, you might see 17,200, 17,200, 17,300 levels on the Nifty. So that's the overall feedback. But today, I guess, of course, the credit policy tomorrow will be a big important event to watch out for. But the broad sense is there is a bit of stability in the broader markets. And there is a sense that maybe in the first half of the new series, you might see a bit of a pullback rally up to 17,200 or 17,300 levels on the Nifty.
Okay, Nimesh, thanks for that. In terms of specific stocks, what are you picking up?
Hi, Prashant. So in terms of individual names, the first stock is Dish TV. And a small stock, but again, in a weak market today, that stock is buzzing in trade. And there is a lot of chatter about some HNI investors actively looking to buy this particular stock. On the other side, though, if you look at the block deal data disclosures, every now and then you keep seeing the lender's name on the sell side. So a lot of the lenders are selling out, and some HNIs are looking to buy this. There is a bit of anticipation that maybe you'll see some corporate restructuring in Dish TV going forward, and hence a bit of action in that stock in today's state. So that's the first one. The second stock is Macrotech Developers, Loda Developers. That stock is under pressure today, down 2%. But broadly, there is a sense that maybe you'll see some fundraising from the company very soon. In fact, if you look at the promoter holding, that's above 75%. They're at 82%. So maybe a OFS can also come in Macrotech Developers going forward. So that's the second one. The third stock is Aptus Value Housing. Again, small stock, been in that consolidating range. There is a strong buzz now that a large block is expected in Aptus Housing as well. So that's the third one. And the last stock is Precall. Again, very small stock, but that stock is buzzing in trade up 16% last when I checked, and on good volumes as well. It had come into my chatter list earlier as well. And in Precall, there is an anticipation that maybe the company is very close to a corporate development, hence a big move in that stock today.
Okay. Nimesh, thanks a lot for that update. So that's the D Street buzz. let's get back to market then. Mitesh is back with us for BTST calls. Mitesh, go ahead.
Yeah. Colgate is something, which is giving a good close, and the last hourly candle is very bullish with good indicator setup. So BTST here. Keep a stop loss at 1595 and 1625, 1630 could be a logical target for tomorrow. While on the selling side, I have Deepak Nitrate with a stop at about 2026 for targets of 1985.
Okay, all right. Thanks very much, Mitesh, for that. I mean, 55 points lower, so, there's no fresh incremental move down which is coming on. There's 18 minutes to go for close. Ambrish Baliga is now joining us to take us through what he's making of things. Ambrish, good to have you with us here. Thank you very much.
Good afternoon, Prashant.
Hi. So, by the way, just before we get to, what you like, and you have a name that we will get to, any thoughts on the market itself, Ambrish? Are we in for a bit of a pullback, extended pullback here?
No, in fact, I think markets are clearly in the downswing. I mean, looking at what's happening globally, we really can't be an oasis for too long. I think the last 1 month, whatever move we have seen, it was, as if we were against the global markets. I don't think, when you have heat all around, you cannot really avoid that. So the way I see that the markets should correct further, and I think that 17,200, 400, I think that was a very good support. With that actually broken, I think we are clearly headed towards the 16,000 levels. I think that should happen possibly in the next 2 to 3 weeks.
Okay, mid-cap IT is selling off, by the way, right now. Intellect Design, L&T Infotech, Coforge, all these names are seeing some significant selling pressure. Amrish, good afternoon. Would you buy any of these names I mentioned? Intellect, Coforge, L&T Infotech?
As of now, I would possibly avoid IT. That's what I've been saying for a while, except for a stock like KPIT, which possibly I look at buying closer to about levels of 520. And among the larger ones, possibly TCS is something which one can look at buying again from a longer term perspective, because at least the next 2 to 3 quarters don't really expect the IT space to really perform, except for the fact that rupee is weak. I think that's been a small trigger. Otherwise, I think order flows could in fact get slower, compared to whatever the managements have been saying. So I would be a bit cautious at this point of time.
Bit cautious at this point of time. Let's get to your pick, Hdfc Life, Amrish. Has this been on your list before as well?
It's been on my list earlier. Although it performed for a while, again it corrected decently well. So at the current levels, it seems like a good buy with not too much of a downside, despite the markets possibly going down further from here. I think the downside is decently protected for Hdfc Life. Again, among the most dominant players in the Indian life insurance sector, with an excellent distribution network, about 383 branches, about 300 distribution partners. VNB margins have been around the best in the industry. It's around 27%. Product mix also is quite balanced with non-par protection and annuity business more or less equal. The banker channels also have been showing extremely good growth as far as Hdfc Life is concerned. The new relationships with Bandhan Bank, IDFC First, and Yes Bank have been showing good. If you look at the UM, it's about 2 lakh crores last quarter, which is about up 10.5%. And if you look at the Q1 earnings, they were also more or less in line. Gross premium grew at around 23% Y-on-Y. PAT has increased by about 21%. So overall, if you look at the performance, look at the growth going ahead, I think it's extremely good. Despite that, the stock has underperformed, so which is an opportunity. And if you look at the Exide Life integration, that's also on track. So I'm valuing Hdfc Life at about 3x FY24 EV. That should work out to about a target price of 680, which is about 30% from here.
Okay. Amrish, what is going right with Cipla? It's just been one of the best sort of stocks, and in a sector which is not doing well, pharma.
No, that's true. But then, I won't really look at buying Cipla at this point of time. There are quite a few contra bets in pharma. Pharma sector overall itself is a contra bet. But in that, I would surely look at stocks like Alembic, which I had recommended earlier also, Alembic Pharma, and I mean, despite that, it has corrected. So I think that's a good buying opportunity. The other stocks which we're looking at is Lupin, despite the sort of like negative results which they've been showing for the last, I mean, close to 4-5 quarters. But still, I mean, I believe that over the next 2-3 quarters, we should see a bounce back as far as the Lupin earnings are concerned. So I think at these levels makes a decent bet. In fact, I'm looking at a price of about 930 to 950 for Lupin over the next 1 year.
Okay, well, of course, now, Amrish, stay on. We have more questions for you. The big queue the market is waiting for is a 3-day MPC meet is currently underway with the policy decision set to be announced by the RBI tomorrow. Largely, there's this consensus that there would be a 50 basis point rate hike this time round. But let's go across to Ritu then. She's going to tell us what are the key expectations. Ritu, over to you.
Well, the Reserve Bank is expected to raise interest rates for the 4th consecutive time, and there is a wide consensus that the hike could be around 50 basis points. All the respondents to our poll said that there will be a 50 basis point hike from the MPC, arguing that there is no real reason for the RBI to opt for a token smaller move, given what we're seeing from central banks around the world. The Federal Reserve, for instance, just delivered its 3rd straight 75 basis point hike and has shown no signs of slowing down. The majority expects RBI to move swiftly and get the repo rates to 6.25% by December itself, while some are expecting rates to hover around 6%. Now, 4 out of 10 respondents said that peak repo rates could go as high as 6.5% in this cycle, while others pegged it at anywhere between 6 to 6.25%. Inflation does remain high, yes, but it is more manageable at this point. It is expected to have peaked in April, like RBI says, and while there are risks to the outlook, economists do not expect the RBI to revise its current forecast of 7.2%. However, given that inflation has stayed above RBI's tolerance limit of 6% now for 3 consecutive quarters, the MPC will have to write an explanatory letter to the government explaining the reason for its failure to contain inflation. Now, the 13.5% GDP growth we saw in the first quarter, that was below RBI's projection of 16.2%. Now, while a third of the respondents expect this growth forecast to be left unchanged at 7.2%, the majority believes it will be lowered to around 7% in this policy. Now, on the stance, there was no real clear majority. 40% expect that RBI will leave it unchanged at withdrawal of accommodation, but half expect it to be changed to neutral, with some even expecting some tinkering in the wording. Now, the banking system liquidity slipped into deficit for the first time after almost 14 months recently, and there is generally more withdrawal of cash as well from the system during the festive season. So, whether it is an OMO or a VRR or something else, markets do expect RBI to take note of the deficit and address the issue in some fashion. The other thing markets will focus on is comments on the rupee, on whether there will be any measures to attract more dollar inflows. And lastly, any comments at all from the central bank on the global bond index inclusion will also be keenly watched.
Ritu, thank you very much for that. Well, time for a quick commercial break here. There is 10 minutes to still go for market closing. See you on the other side. Okay, welcome back. So the market with 7 minutes to close is down about 40 points, 16,818. Earlier today, we caught up with Nilesh Shah, Managing Director at Kotak Mahindra Asset Management Company. His views on the market. I mean, the team at Kotak has been slightly cautious for a little bit, and he sort of explains his views from here out and for some sectors that he would still bet on in this environment. Listen in.
Extent of outperformance could narrow down. There is a massive global sandstorm blowing out. We are like an oasis in the desert. But if sandstorm passes through us, some sand will be deposited. So I do believe India is in a better shape vis-a-vis others. We have some challenges like our external position to take care of. But once the sandstorm is over, that India is truly an oasis in the desert. We have been lucky enough to identify chemical sector when it was just turning around. And we still believe there is a miles to go in this journey. Rupee depreciation has made Indian chemical company even more competitive than what they were. They are now investing in 1 year in fixed assets, what they have invested over 30, 40 years. They are emerging as a preferred buyer or buyer of choice. And especially the European crisis on energy side is impacting chemical production over there. Put all these things together, while one needs to keep a watch on the valuation, but chemical sector today is, like India, on a 1 year basis, it looks expensive. On a 5 year basis, it looks very, very cheap. The prices have to reflect fundamentals. And with the benefit of hindsight, we can say that especially small and mid-cap IT companies' prices had run up way ahead of fundamentals. Now those corrections are happening. We believe over next 3 to 6 months is accumulation time for IT sector. The margin pressure on them because of salary increases will get reduced significantly. We have started seeing companies talking about moonlighting, bringing workers from home to office. This would not have been possible if they were sure that the pressure on salaries and wages or the employment will be reduced. Best thing for investor will be to buy on dips. We are indeed an expensive market vis-a-vis peers on a 1 year valuation. And we are indeed a cheap market vis-a-vis peers on a 5 year valuation. So be a long-term investor, use this correction as an opportunity to build your portfolio, albeit with a longer-term horizon.
Okay, so that was the view from Nilesha. Let's start wrapping up the market action. Before we do that, I just wanted Mitesh's thoughts on technically how is the market looking now, Mitesh? On the Nifty, we are now down 5.3% for the month. On the Bank Nifty, we are almost down 5% now, but from the highs, we're down exact 10%. And the high was just recently, last week, right? So from that point, we're down 10%. What are the next levels to watch chartically?
Anuj, the bad thing is that we've, today and yesterday firmly been below the 200 average. The other, thing which is not very positive is the fact that we had a weekly gap on Monday, which the market has shown no sign of or inclination of filling it up. Also, the fact that I think, on the weekly charts, the indicators have started turning negative. So I think my sense is that eventually this should mean that we should head lower. And while I've talked about support at 16,750, I think they will only, give you some kind of short covering and pullback kind of rallies. I think the eventual targets could be much lower, closer to about 16,250 to about 16,200.
Right, Mitesh, thanks a lot for joining us. Have a good evening. Talk to you tomorrow, of course. Let's now start wrapping up the market action for the day, and it's a familiar script now. Any rally is getting sold into. Today we had just one, the opening rally, and after that was sold into. So from 17,030 thereabout, the Nifty lost almost 200 points. On the Bank Nifty, we lost a good 500 points from the top, and that on expiry day tells you the kind of money people would have made on the short trade in today's trade. In terms of index stocks, it was across the board. Asian Paints was the top loser, down 5%. IT stocks were weak. Tech Mahindra, Wipro, TCS were all down. Financials joined in. Kotak Mahindra Bank, Bajaj Finance, Bajaj Finserv, ICICI, HDFC Bank were all weak in trade. Autos, Hero MotoCorp, Bajaj Auto, they have been seeing some profit taking off late, so they were down as well. Maruti as well included in that. Adani Ports was a bit lower, though did manage to come back towards the end. On the upside, commodity names, ONGC, Hindalco, Shree Cement, Tata Steel, they did well. Cipla has been making new all-time highs, that did well. Dr. Reddy's made a bit of a comeback, that's doing well. ITC was a strong stock today. It's corrected a bit over the last couple of days, around about 5.5%, but today it was higher. And Apollo Hospitals, Sun Pharma, more healthcare names basically. Tata Motors sort of bucked the trend in autos, and IndusInd bucked the trend in the financials. But overall, nothing kind of session, you have to say. Though I must say that the broader market didn't look that bad. In fact, on margin, the broader market was actually positive, Prashant.
Yeah, I mean, 1,250 stocks were higher, and about 900 stocks, a little over that, were lower. So market breadth was positive. Tata Chemicals ended up about 4.5%, was up 7-8% earlier, but still strong close. Zomato was up 6.5%, 62 on the name. PVR was up 6%, 1760 on PVR. Mazgaon Dock 8% higher, 464. Sun Pharma Advanced Research, that is Spark, up 13.5%, 228. Abbott India was up 6%. There was Century Enka about 11% higher. Rights India was up 8%, 325. Bharat Dynamics, actually a fair bit of these defense names did well. I mentioned Mazgaon earlier, Bharat Dynamics, another one. All cargo logistics 5% higher. Again, only large volume names I'm mentioning here. Chemcon was, of course, we highlighted that name, 8%, 452. Dish TV, 9% higher. Union Bank, 4.5%. And actually, it's a pretty decent session for broader markets. Bank of India was higher. Mahindra Logistics went up about 5%. McLeod Russell was up decently, about 5%. Suven Pharma was up 8%. So many names doing just absolutely fine. Let me just highlight a few losers as well, broader markets. So Mindtree, 3.5 lower today. Deepak Nitrite, of course, was down sharply. Aarti Industries is something we highlighted with Nimesh with that Morgan downgrade. Adani Transmission was down 6.5%. Lal Pathlabs 4% lower. DB Realty down 4%. Bajaj Hindustan down 4%. Intellect Design down 4.5%. ITI down about 5%. And a bunch more. But I think I've kind of gone through the list of the majority of the volume-led losers in trade. All in all, I mean, 15 points lower on the Nifty, so it's absolutely flat on an index of 16,850. So that's the end of the expiry, and of course, tomorrow we come back with a new series. Well, it's a wrap on this edition of Closing Bell. From all of us here, thank you very much for watching, but don't go anywhere. Big deal comes up next.